the government makes it important for you that you have to have a valid ETR receipt. So you can't offset something if you don't have a valid ETR receipt. So that's why it's very important to issue both an ETR receipt and also to collect ETR receipts from the person you're buying from. Yes.
Okay. I've seen this trend whereby many businesses or entrepreneurs are having a situation, especially startups, where they file for VAT because there's a deadline every month, like 20th.
Yes.
And the deadline for the income tax is once in a year.
Mm-hmm.
So that that deadline is the one that is looked up to.
Yeah.
So that the guy would rush because there is a deadline,
yes,
to be able to gather everything and to make something so that they just present something to KRA.
Yeah.
I don't know in your practice, how does it look like?
Okay, one of the things that I think it's sort of a Kenyan culture. Let me put it that way, especially that deadline aspect. It's a Kenyan culture. It's not best practice. Let me explain why. So there's for sole proprietors or people who are running businesses with as themselves. So the individual PIN is also their business PIN. The requirement is your tax year or your year runs from January to December. That's a requirement. Then the requirement by law is that in the preceding year, in the following year, for example, in the year 2020, I am told as a sole proprietor or even as an employee, in the year 2020, you need to file your tax return for the year 2020 by June 30th the following year. So by 2020, I'll have my deadline for filing my tax return for last year is June 30th this year. Mm-hmm. So I have a window of 6 months. Literally, on 1st January 2021, you can actually file your tax return for the previous year.
2020.
You can,
yeah.
As in it's actually, you can actually go to KRA and just file it. It's not, you do not have to wait up to the end of June 30th. You don't have to wait. So what ends up happening is that then when you start filing things in the deadline day, first the system gets jammed up because everybody's filing at the same time. So at some point you end up filing late, then you end up incurring a penalty. So for individuals who file late or sole proprietors, the penalty for not filing an income tax return on time is 2,000. For companies, it's 20,000 if you don't file it on time. So it's not worth the effort. So you'd rather just file it in time. So and then again another aspect that comes with when you're doing it late, are you doing the right thing? You end up doing now maybe doing things in the wrong way. And now comes to the aspect of now, especially VAT. VAT has become the carrier have automated systems that check VAT returns. So if you put a false claim or if you put a false sale, KRA will deny it automatically. It happens so fast because they have a way to counter check all what is happening. It's called automated something, so VAT automated check, something like that. Yes, mm-hmm. It happens automatically as you file your return. Yes.
Mm-hmm. So what should be the best practices that a business or an enterprise should be able to do so that they are in good books with the KRA? And also, yeah, let's tackle that first. What should be the best practices that a business should do so that they're able to ensure their books are in order? Because I've seen many businesses, they always have run into problems with the KRA.
So one of the things fundamentally, I'd always suggest, tell business owners, hire an accountant at outset. If you can't afford a full-time accountant, hire a part-time accountant. So so somebody will come every so often to look at your books and help you do the tax returns and do your bookkeeping. So the goal here is that you are the business owner. You will focus on your core business. Focus on what you do best. Focus on running the business, marketing, selling. Let the accountants, tax advisors come and do these non-core activities like tax returns, bookkeeping, payroll, and that's something like I've been doing for the last 11 years. Mm-hmm. So let them do that. That is something you can You can look into it. Again, if that is not an option for you, I'm sure there's so many small businesses that are starting out. You're starting out from your home. You don't have even the capital even to sort of think about hiring an accountant or even having a part-time accountant, which again, it happens. It's valid. So what you do, and number one, that's very critical, maintain records. When I say maintain records, maintain physical. If you can't maintain physical records or even what you call electronic records. So if you do a sale, issue a receipt or issue a sales invoice, or just issue a record of that sale. If you buy something, get a receipt. It can be a digital receipt. It can also be a physical receipt. Just as a minimum, maintain a record of what you're doing. Selling, give a receipt. If you buy something, get a receipt. Maintain it, and if you can, just file it file it somewhere in a box or in a file in a chronological pattern. So every time you buy something, file it in that date that you bought it. Just file. Maintain a record. That's the first step. Step number two is now what we call now summarizing those records. So what you do, just have a summary of this is what I bought, this is what I sold. Have a summary of that. Mm-hmm. That summary is very useful in determining now what in terms of what income did you make for that year. It's very, very important. That summary will be able to do that for you. So at the end of the year, what you can now then do is now come and you can now get a consultant or get a consultant now to help you come up with the proper records to give to KRA. They'll help you tell you now this based on this is what is an allowable expense in terms of KRA. So at the end of the year, this is how much profit you made and this is how much tax you ought to pay. So as a minimum, just keep records at the start. And actually, it's a requirement in law to keep records for your business for a minimum of 7 years. Mm-hmm. So KRA can come and investigate aspects that deal with your business that happened the last 7 years.